Okay, so we are going to go over TradingView tools. Just trying to get accustomed with TradingView, what we're looking at, everything here, everything like that. So it's a chart, right? Everybody knows what a chart is from math class. Now this doesn't look like your typical line graph, but we have on the right side we have price, and on the bottom we have time. Time is our x-axis. So I don't think there shouldn't be much that anyone needs explained there. But we have price, we have the time. Up here is your buying and selling. Now this number in the middle is the spread. So spread is, as you can see, the difference in buying and selling. I'm on paper trading, so I can show an example here. I can't because the market's closed. So since this is such a large spread, if I tried to sell right now, this is the price that they're giving me to sell. So if I entered a sell trade, it would literally be the whole way down here would be my entry, even though price is up here, which means on one NQ contract, I would be in $400 of drawdown. I'd be in a $400 loss entering my position straight away because of this spread. Now, that's not something we're going to have to worry about, but it's good to know. Spread for NASDAQ futures during session times is like 25-50 cents. So we're going to talk about sessions in the next video. But yeah, that's nothing to worry about. So other tools we got here. I have other candlestick types here. This was honestly, I was using these like at the start of my trading, maybe trying to use them, but I never really successfully used them. All we're messing with is regular Japanese candlesticks, which is what they're called on some other softwares, but on TradingView they're just called candles. And yeah, so I guess let's finish here. You can go to indicators and you can pull up indicators. I'll eventually share the indicators that I use specifically. These are all the ones I've favorited, but I'll share the indicators I use here. These 7 I've had for a pretty good amount of time, and I like them for sure. So I see myself continuing using them. We have right here, you can choose how many charts you want per screen. So for me, I have 3 monitors. So sometimes I'll have a second chart up on a second window. You go right here and you can drag this tab out and then pop it out to another window, another monitor, and then you could have you could technically have I could have, with my plan, I could have 12 charts up at once, because I could have 4 on each of my 3 monitors, but it's just way too much for me to look at. So I really I legit have 2, and I zoom this one in most of the time because you really just want to be focused on what you're looking at, not looking between X different things. It just becomes distracting in my opinion. So that's why I always go with I like to go at least with the 2, and then sometimes I just pop out here, see where we are, come back in. So yeah, I mean, it's preference at the end of the day. I need to get new monitors. Other than that, I would probably have this second chart just always on a different monitor. But since my monitors are not the perfect resolution, when I put this on another monitor, it'll be like zoomed in like this instead of being like this on this monitor, because the resolution's lower. So it's just harder to see. So I just tend to keep them all in this center monitor. But again, this actually probably better because most of you will be using one screen, and it's going to be one screen's all you need. You don't need more than one screen. So yeah, up here, I'll go over this right now too. This is our instrument. This is what we're trading. We're trading the NASDAQ futures, which is the top 100 stocks. It's an index fund, so it's a combination of the top 100 stocks, which if we go right here and we go to NASDAQ, these are the stocks. Some people use this. I haven't seen any ICT trader, which is the concepts that we're going to be learning, use this, but it's an interesting thing to look at. But these are all the companies essentially that make up the NASDAQ 100. Not super relevant for what we're doing, I'll say that, but it's there. So, and yeah, we're going to be trading the E-mini NASDAQ. Also, I'll give a couple shortcuts. If you hit the comma button on your keyboard, it pulls up the change time interval, which I don't really ever use because I just click top left. It's not that deep. And if you just start typing letters, it will bring up the next symbol. So we're trading the NASDAQ sometimes, though, and if you need to bring up another symbol, you can just click top left and go to symbol search. We're trading the NASDAQ. We're trading NQZ 2024 right now. Obviously, the year is 2024. The Z stands for December. If I just type in NQ, you'll see. The Z stands for December. That means it's because it's the most current contract. So this contract is going to expire. I believe it's the third week of December, and we'll move to trading NQH 2025. That's where all the volume will be, which will then expire in March. So every 3 months, the contract rolls over and you move to a new contract. We're not swing trading, so this doesn't really really matter for us. You want to be trading on the current contract, but for swing traders, there's you can run into some issues if you have a trade on the December contract and then it rolls over to March, but you still have your trade open on the December. I'm not sure what the issues are, but I know it's not a good thing. So, but yeah, so symbols though, we will be using ES occasionally for ES. So ES is the S&P 500. It's the E-mini S&P 500, and then we'll also be using YM, which is the Dow Jones Index, US 30, top 30 companies, S&P top 500, NASDAQ's top 100. A lot of these are the same companies. If the company's in the top 500, it's going to be in the top 30 and top 100. So so these are correlated assets. So what is that? That means that when one asset takes a low, depending on, sometimes we want to see another asset also take the low, or another asset not take the low, then that'll tell you something. So that's how we use NQES. We will also use DXY. DXY is the US dollar index. You don't typically trade the US dollar on the 1 minute, or even look at it for bias. You would look at the US dollar on the hourly chart or something. You could say okay, the US dollar on the hourly chart, we just took out this low here. So 8 a.m. on Friday, when we took out this low on the dollar, we could expect now going into 9 a.m. that we were going to go lower on NQ. And when we go back to NQ and we go to December and we look at post 9 a.m., that's Monday. Post 9 a.m. on Friday, we literally dropped off a cliff, essentially down, and we came to this low on NQ. So that's kind of how assets are correlated, and that's kind of what we will be using other assets for. But we will be trading NQ and pretty much just be sticking to NQ because it's for sure the best option to trade. We talked about the tools a little bit. Oof. We can talk about the tools without actually placing any of the tools. We have a long position, short position. You saw it pop up. We'll use that a lot. That's just for visualizing trades. You can use it to get into trades as well for paper trades, but it's not too helpful. Now let me try this actually. If I hide indicators and then I go to NQ1, so NQ1 is the continuous contract of the NASDAQ, October 1st to, okay, yeah. the continuous contract of the NASDAQ. We use the current contract because when the rollover is happening the week before and after, the price action is slightly different. It's not different price action, but the prices will be different because when the new contract opens, it just literally opens out of nowhere. So it'll start like weird. But yeah, so this is just really framing trades. You can see like your stop loss, your risk to reward, how much you should be risking, because like mine right now is set to $100 of risk. So you can see right here that with $100 of risk, I should be taking 0.15 contracts. Right here with this stop loss, I should be taking 0.2 contracts. So that's the same for the shorts. It's just opposite, obviously. We have trend lines. You can make them dotted. You can make them dashed. You can make them straight lines. If you hold shift on pretty much a lot of these TradingView things, I did not know that it does this, but it snaps to 45 degrees as well, but it snaps to every 90 degrees. So like you can make perfectly straight lines. And you see on the left side here, I have the magnet on. I have it on weak. That just means that when I go near a like candlestick, it will snap to the values on the candlestick. So you can see how that's snapping to that high. So then you don't have to do it like manually. Very nice for sure. We have the fib. Now, I've been using this a lot more recently than I was before. The fib is what we're going to be using for a lot of levels inside of gaps or levels of wicks or swing projections. All of those things kind of are what we will use the fib for. So essentially, I mean, yeah, it's just you're drawing levels from here to here would be 0 to 1. And then it's drawing out, this would be 50% more than this range, and then this would be 100%, and then this would be 300%, and you can go down to, 350, this would be like 4, and then like 500%. And a lot of the times, you'll typically find that like a target will line up with the 2x swing projection level perfectly, like within 5 points. And when you have something like that, that just gives you more confidence in your like target for the trade essentially. So like we can see the 5x swing level off of this move off open back up into this fair value gap here. Literally we came down right here, and then yeah, we came below it to probably the 5.5 level, I'd say. That might, yeah, it's probably 5.5 level. A little bit below. That's probably 5.5 level. That's my guess. This was also like something though. I don't remember. A low or I think this was like a. This is definitely inaccurate because that's going to be from a long time back. That was something, but so yes, we will use. I have locked drawings on NQ. We use the fibs for swings as well as 50% levels, mean thresholds, as well as quarters. So when we go here and we go to just a extended fib, we'll have the 75% level, the 50 level, the 25, 0, the 1. And that helps a lot with building narrative and stuff like that. Classic rectangle, we'll use these for our boxes. I guess let's keep it consistent too. We're going to go... So normal fair value gaps that we're looking at, I always just keep them basic gray. IFVGs, ICT style. What he does is they're always going to be. I actually need to fix this because this is just kind of pissing me off. This is the correct IFVG template. And honestly, I don't like having text in my, I don't like having text on my things. I'd rather just have the color. The text gets a little bit too distracting for me. So there's that. And my screen's going dark. And there we go, back to brightness. IFVGs is orange. We use red for breaker boxes. And we use, what am I missing? I'm thinking in my head here. Opening and balance, I like to use pink. And I will say, even though we're using orange for IFVGs, I don't use IFVGs that often. So I will use orange for when I'm drawing out an IFVG opening and balance for like the week. You'll see those will be orange for me a lot of times, just because it's a color that I tend not to use on my charts. Would it be better to probably use like blue or something? Maybe, yeah, I'd say so, but it is what it is. Raise, I use raise sometimes. I don't like to use things though that extend anymore because it clutters your chart. So then after price action opens on Monday and it does whatever this on Monday, when you're here, you're not going to be at 1 a.m. on Monday, but when you're here during the day, you're going to see this line and you're going to be like, what's that line? And you're just going to have to delete it. So like I prefer using, and then when you delete it, whatever it referenced back here, you're not going to see it. So I've just been using trend lines, and then stopping them when I want it to stop so that they don't extend into the next day. So I don't have to just remove it, and I can look back on it essentially and see like, why was I in a trade there? Why, blah, 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 that kind of stuff. I just have the arrows just for forecasting. It's fun to like say, okay, I think we're going to open and do this, and you take a screenshot and then, come back after open and see what actually happened. The vertical lines, we just use this to frame time sometimes. Like, okay, I'll tell you, most of the time that we're going to be trading is going to be the morning. I'm going to talk about sessions in the next one, but we'll use these vertical lines to mark out sessions that we're going to be trading. Say like open to 11 a.m. You draw a line at 9:30 and you draw a line at 11. You can see like, okay, I'm not going to trade until we go past this line. And it's just good to sometimes frame it, especially for like macro times. Sometimes if you're doing like the 10 minutes of the hour, it's nice to see what happened then too. You can see like, okay, during this macro time, this is what we did on Friday. So it's helpful to frame stuff sometimes. Text doesn't need an explanation. Brush doesn't really need an explanation. You just can draw, highlight stuff. Pretty helpful. And then horizontal ray goes left and right, the same as a one direction ray, horizontal line. And again, don't use that really anymore for the same reason as the horizontal ray, because I don't like when stuff extends. You'll see the fib. Well, sometimes the fib extends right just because that's kind of how it works. Like you could do it to not extend, but then you'd have to move the way that we draw fibs. Like you're often going to be drawing it above itself on like a wick or something. And when you have to do that and you have extend off, it's literally just going to be like no line and just these levels. So you have to have extend on. So sometimes what we'll do is you just replace this level with like a trend line. Like, okay, if I want to look at the 50% of here, I go right here and I just put a trend line here. And then I name this like consequent encroachment CE of wick, and you make sure it's the same price, and then you just delete this, and you'll just have your trend line there. So it's like that's all you need. But you'll use the fib to get that, obviously. So and yeah, you can have chart layouts as well, which is like what this chart is. This 2 with these indicators on this symbol on this time frame, and you save it, and then when you close trading, when you open it up, it'll be the exact same next time. So for sure you want to be doing that. We missing anything right down here? This is actually something I've been using that frequently recently, but was using it a bit in the last couple months. Electronic trading hours versus regular trading hours. So regular trading hours, you can see there's these massive gaps. This will only show you between 9:30 a.m. and 4:15 p.m. the New York trading hours, New York Stock Exchange trading hours. So you can see we have these gaps. And then you can see the gaps. So we'll use these sometimes just to see like yesterday's close versus today's open, because that's pretty helpful for determining daily bias. Last thing I can think of here, when you're looking at the daily chart, you get this extra button for settlement. This is how it determines how the candles are printed. So if you look like somewhere like right here, you can see when we click this button versus unclick it, this uses the settlement as the close of the daily candle, which would mean 4:15 p.m. as the close of this candle, instead of using the 5 p.m. International close of futures before the reopen at 6 p.m. So that's just the difference. So sometimes we'll use various things here. Like, to be honest, the way ICT has said it is he uses whichever one is a bigger gap. So say you were trying to look at this gap between these candlesticks, you would use settlement turned on because it's a bigger gap, whereas settlement turned off is a smaller gap. And like we can see, I can't really find an example of where the gap is smaller with settlement off, but yeah. Right side of here we got a short list of just all your symbols that you want to click on. I never have this open because it's just annoying. All your alerts. We don't use this. Don't use this. Don't ever look at that. Never looked at that. And then notifications. Never looked at that. So you can screenshot your charts. This is how I take a screenshot of the whole chart if I wanted to. You just hit this button right here. Yeah. Down here you have a trade. You can click trading panel, I think, right here, and then it'll pop up with all the different things you can sign into to trade with, and you can click on like paper trading to demo trade. I never use any of this. Don't use that. I think that should be everything trading view wise, hopefully. And like, yeah, you just want to be comfortable with the application. I mean, you're gonna need to spend a lot of time on it realistically, so like it's something for sure that you should so yeah, down here you can see me hit this button a lot. This just maximizes the current chart you're looking at, and you can like zoom in or out. You can scroll left or right. Reset chart view is helpful. As you can see there, my candlesticks were like completely flat, because when you go from a higher time frame like daily to 1 minute, they're going to be flat because your price scale has to be so big on the daily. You can just slap that, it'll reload, and it'll often it'll turn auto fit data on, which you can see it auto fits the data to like show on my chart. I will say I don't have that on really ever because it's just annoying in my opinion. I like having control of it, and I don't really get like left behind. So I like to scroll myself. Yeah, well, that should be the TradingView tools. And I guess let me know if you have any questions, and I'll answer them.